Thank you for joining us, and here are some of the stories we're filing at this hour. I am Frank Komalape. We'll begin now from the Federal Capital Territory, where the federal government has directed Nigerian ambassadors in foreign nations to identify and provide strategic investors in their domains capable of investing in Nigeria. It gave the instruction through the Nigerian Investment Promotion Commission at the roundtable on economic diplomacy meeting with various Nigerian ambassadors hosted by the Abuja Chamber of Commerce and Industry. The acting executive secretary, Nnpc, Emeka Ofo, said Nigerian embassies in other nations should provide opportunities for the commission to engage with leading investors in the foreign countries. Emeka Ofo noted there is the need for not just the investment promotion agency to work towards attracting investment into the country, but for the high commissions and embassies to strongly look at how we can convince investors in those countries to invest in Nigeria. End quote. He said the Nnpc conducted a study to identify certain countries and their competitive advantages, adding that it was important to attract investors from these nations. The Nigerian ambassador to Ukraine, Shino Alege, said Nigerian embassies were ready to work with the organized private sector through the various chambers of commerce across the country. Away from there now, Nigeria's total debt stock rose to 41.6 trillion naira in the first quarter of 2022, representing a 2.05 trillion naira increase compared to 39.56 trillion naira recorded as of December last year. In dollar terms, Nigeria's debt stock rose to $100.1 billion. Similarly, Nigeria's debt-to-GDP ratio rose to 23.27% in the first quarter of the year, compared to 22.47% as of December 2021. While this is lower than the self-imposed limit of 40%, the rate is quickening faster due to increased borrowing and tepid economic growth. This is contained in the quarterly public debt portfolio report released by the Debt Management Office, DMO. According to the agency, Nigeria's total public debt stock includes new domestic borrowings by the federal government, which was used to partly finance the 2022 budget deficit. The debt stock also includes $1.25 billion Eurobond issued in March 2022 and disbursement by multilateral and bilateral lenders. Similarly, there were also increases in the debt stock of the various state government and the federal capital. A breakdown of the debt stock shows that federal government domestic debt increased by 3.99% in the first 3 months of the year to $48.45 billion from $46.59 billion recorded as of December last year. And our operators in the oil and gas sector as well as other stakeholders are uncomfortable with the continued rise in the amount spent in subsidizing premium motor spirit, popularly called petrol, as it jumped to 947.51 billion naira between January and April 2022. An analysis of data obtained from the Nigerian National Petroleum Company Limited on Wednesday showed a monthly rise in PMS subsidy spending by the oil firm through Nnpc, describe it as under recovery or value shortfall. The President, Petroleum Products Retail Outlet Owners Association of Nigeria, Billy Gillis-Harry, explained that the actual cost of petrol without subsidy was usually a little higher than that of diesel. He affirmed that if not for subsidy, PMS would be selling around 550 naira to 600 naira per litre, going by the international cost of crude oil and the fluctuations in foreign exchange. The approved subsidized pump price of PMS in Nigeria is between 162 to 165 naira per litre, but oil marketers stated that the actual cost should be a little higher or about the same price of diesel had it been PMS was deregulated. Nnpc has been the sole importer of petrol into Nigeria for several years running. The firm has also been subsidizing the commodity all of these years. Latest figures obtained from the Nnpc in Abuja showed how the amount spent on fuel subsidy grew from January to April this year. And our electricity distribution company's customer registration exercise has been stagnant at 10 million for the past 2 years. Findings by reporter, or according to data, has shown. Further findings also showed that about 47% of registered power users, about 4.7 million, have been metered. Statistics sourced from the Association of Nigeria Electricity Distributors indicated that the 10 million registered customers and 47% metered power users were recorded as of the fourth quarter of last year. The association said in its latest commercial KPIs that at the end of 2021, over 10 million customers are registered, with approximately 47% metered. A study of the metering progression on the association report showed that as of 2018, 42% customers were metered. Metered customers remain at 40% in 2020, increasing to 47% at the end of 2021. The Nigerian Electricity Regulatory Commission quarterly report for the fourth quarter of 2019 stated that as of the fourth quarter of 2019, inadequate metering was a serious challenge in the industry, with only 37.7% of the total customer population of about 10.3 million were metered. And now the National Bureau of Statistics, NBS, has said electricity customers rose from 6.99 million in 2015 to 10.37 million in 2020. Electricity Report 2015 to 2020, which the Bureau released, said in the period under review, the number of metered customers increased consecutively on a year-on-year basis from 3.15 million in 2015 to 3.8 million in 2019, but declined to 3.51 million in 2020. NBS said customer numbers under the reviewed period between 2015 to 2020 increased successively on a year-on-year basis, with the highest numbers recorded in Ibadan. Electricity Distribution Company, which estimated billing customer record, also showed a year-on-year positive growth rate consecutively from 3.85 million in 2015 to 6.86 million in 2020. In 2020, the customer numbers were highest in IBEDC with 1.2 and lowest in Eco Distribution Company with about 269,022. The manufacturing companies say they cannot access loans at the Central Bank of Nigeria's 5% lending rate under its intervention scheme for manufacturing and other critical sectors. According to them, the loans have structural framework problems and are almost never accessed in banks as 5%. They added that banks were more open to giving manufacturers loans at their official market rates. The chairman of the Manufacturers Association of Nigeria's Electronics Sectoral Group, Ijoma Odonye, said efforts made by her firm towards accessing the intervention funds through of its designated commercial banks had proved abortive. According to her, the sector intervention fund that was going for 9% before but now brought to 5%. Sectoral Chairman of the Manufacturers Association of Nigeria's Gas Users and Executive Director of Hafa Industries, Michael Ola Adebayo, added that the structural framework of the CBN intervention leading has complexities that limit manufacturers from accessing them through the designated commercial banks. The CBN had agreed to leave interest rates at 5% per annum for critical sectors and manufacturing industries until March 2023. This decision followed the resolution of the Monetary Policy Committee to increase the benchmark interest rate to 13% from 11.5%. The Director of Corporate Communications of CBN, Osita Nwanisobi, however, disagreed with the position of the manufacturers. According to him, more than 1 trillion naira has been disbursed under the intervention scheme for the manufacturing sector and others.